Welcome to The Explainer. Today, we're going to break down one of the most important metrics in all of investing.
So let's start with a huge question. What really matters more, a stock's price or its value? A low price doesn't always mean you're getting a good deal. Sometimes paying more is actually smarter. To really get this, think of a stock like a little machine that just spits out cash for you. The stock's price? Well, that's just what you pay for the machine. Let's say it costs $30 a share.
And the cash it spits out every year, that's the company's earnings. We'll call it $3 per share.
The P/E ratio simply shows you the relationship between the price you pay and the earnings you get back.
So in our example, that's a $30 price divided by $3 in earnings, which gives us a P/E ratio of 10.
So what does a P/E of 10 actually mean? It's simple. You're paying $10 for every $1 of earnings.
Which leads to the million-dollar question, right? Is a high PE better or is a low one better?
Well, usually a lower PE is what you want. You're just paying less for the same amount of profit.
Legendary value investors, like Warren Buffett, they built fortunes focusing on exactly this, value, not just price.
But wait, there's a catch here. A low PE isn't everything. You've got to factor in growth.
Let's look at a real-world example. We'll compare two massive companies, Apple and Procter & Gamble.
Check this out. Their PE ratios are almost the same, so they look like a similar deal, right?
Well, the huge difference is growth. Apple's expected to grow way faster. And that's where the PEG ratio comes in.
See, the PEG ratio gives us a much fuller picture because it actually factors in a company's expected growth.
And here's a good rule of thumb. A PEG ratio under 1 could mean you found a real bargain.
So the whole point is, these ratios help you look past the price tag to find a company's true value.
And here's a quick little tool right from Warren Buffett's playbook to help you start your own search.
And that brings us right back to where we started. So, are you investing based on price or on value?